Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 17th of June. I'm Daniel Lam, your host for the podcast. Yesterday, we talked about the fundamental forces that led to the tug of war for the US 10-year Treasury yield, i.e. downward pressure because of the series of soft US inflation prints leading to the narrative of Fed rate cuts, while the concerns about budget deficit is keeping yield levels elevated. Now, there are reports about the US government buying back debt through the Treasury Department in the month of June. This QE-like buyback operation is helping to keep the yields capped. And it will be put to test because of the conflict in the Middle East. Now, we've spoken about how Trump's primary focus is to keep the bond market, i.e. the government's borrowing rate, stable. He had tried to save money by the Dodge initiative, as well as cutting down budget that he needs to spend for NATO. He will try to grow the US economy such that the tax and related revenue will gradually be able to shrink the budget deficit. So we'll be expecting Trump to try to defuse this threat of escalation of tensions in the Middle East. We see room for Brent crude oil to test the near-term resistance at $82 per barrel if tensions escalate because of increasing risk of disruption on oil supply. Rising oil prices can lead to inflationary pressure and delay any possible rate cuts from the Fed. Now, the estimates is that OPEC can increase their oil supply by approximately 7% of the world's oil demand. Now, this can help, but not fully mitigate the disruption of oil supply if we do get a full escalation of the conflict. Therefore, it is now very important to watch the following. 1, the nature of any Iranian retaliation, particularly any attempts to disrupt energy supply. 2, whether oil prices will hold below key technical resistances. And 3, any impact on US inflation expectations as a result of higher oil prices. We've been saying diversify, diversify, diversify in investors' portfolio since Trump 2.0 took place. And in such situations, we're expecting the yen and gold to be strong portfolio diversifiers. Alternative assets are also worth considering here. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.